Welcome to Chapter 17. This is Professor Mayer. In Chapter 17, we review the Auditor's Report. We will look at the audit report using PCAOB standards. We will also look at the audit report using ASB standards. In addition, we will look at qualifications to the unqualified or unmodified audit report and potential additions to the audit report depending upon circumstance. For our purposes in this discussion, we're going to focus on audit reports of financial statements. Keep in mind that in a financial statement audit, we are auditing the complete financial statements, including balance sheet, income statement, statement of cash flow, and statement of retained earnings. We're also auditing the notes to the financial statement. In our audit, we express an opinion of the financial statements taken as a whole. We are not expressing an individual opinion of each element of the financial statement. In the next couple of slides, we're going to focus on the audit report related to audits using PCAOB standards. Some of the requirements listed here, which we'll go into more detail in the next several slides, includes specific requirements. The word registered and independent needs to be in the title. It must be addressed to shareholders and the board of directors. There needs to be a reference of auditing standards of the PCAOB. The audit report provides a discussion and a detailing of the responsibilities of both the auditor and management. There is a paragraph indicating that the auditor has also issued a report on the client's internal controls. There is a paragraph related to critical matters. The audit must be signed by the CPA firm and not an individual auditor. Let's now go into detail as to what's actually in an audit opinion letter. The reason and the purpose of an audit is to have the auditor express an opinion. So the most valuable piece of the audit report is the opinion paragraph. We need to understand this in a little bit of detail. So I may be reading most of this, but I want you to really understand word for word in terms of what the words mean and how they apply to the audit. So what it states is we have audited the accompanying balance sheet of X company, the company as of December 31st, 2017 and 16, and the related statements of income, comprehensive income, stockholders' equity, cash flow for each of the 3-year period. What we are expressing is an opinion. In our opinion, the financial statements present fairly in all material respects the financial position of the company as of December 31st, 2017 and 16 and the results of operation and its cash flow for each of the years. Now you notice that how do we audit this? We audit this based upon generally accepted accounting principles. So you notice the next line is in conformity with accounting principles generally accepted in the United States. The next paragraph identifies the audit of the internal controls. This is unique to the audit report specifically for publicly traded companies. We have audited in accordance with the standards of the Public Company Accounting Oversight Board, or the PCAOB, the company's internal controls over its financial reporting as of December 31st, 2017, based upon the Internal Control Integrated Framework, or the COSO model, and we're expressing an unqualified opinion. So just like the financial statements, where the basis of our opinion is in accordance with generally accepted accounting principles, when we're auditing our internal controls, we're auditing based upon the COSO framework. Let's now talk about the paragraph related to the basis of opinion. In this section, we identify the company's responsibility. Company's management is responsible for the financial statement. What is the auditor's responsibility? Our responsibility as an auditor is to express an opinion of the financial statements based upon our audit. The next paragraph identifies the fact that we conduct our audit in accordance with the standards of the PCAOB. The next sentence is very important. The standards require that we plan and perform the audit to obtain reasonable assurance about whether the financial statements are free of material misstatement, whether due to error or fraud. This sentence follows the audit risk model, where we are looking for the risk of material misstatement, and then we test for material misstatements within the financial statement using our substantive testing. The next sentence follows the same train of thought, where it states that our audit includes performing procedures to assess the risk of material misstatements of the financial statement, whether due to error or fraud, and performing procedures that respond to those risks. Such procedures includes examining on a test basis evidence regarding the amounts and disclosures in the financial statement. As we've stated in another lecture, the audit is done on a test basis, meaning that the auditor is explicitly stating that he or she is using sampling to come to a decision related to material misstatement. The auditor is regularly communicating with the audit committee. In certain situations, critical matters are going to be communicated embedded within the audit report. These relate to accounts or disclosures that are material to the financial statement, involving especially challenging or subjective judgments. The communication of critical matters does not alter in any way the opinion of the financial statements taken as a whole. So let's talk just very briefly in terms of what critical matters are as they relate to what's reported in the audit report. For an item to be reported in the audit report as a critical audit matter, it must meet the following three criteria. First, the item must be required to be communicated to the audit committee. Second, the item involves accounts or disclosures that are material to the financial statement. And finally, the matter involves especially challenging, subjective, or complex audit judgment. The reporting of a critical audit matter does not change the audit opinion. The reporting of critical audit matters provides the opportunity for an auditor to communicate additional critical information to the user of the financial statement. In the notes to this video, I'll provide a link to a journal article that provides a good summary of the critical audit matters and also provides a number of examples. Let's now shift our attention to the auditor's standard report for non-public clients. These are audit reports that are issued using ASB standards instead of the PCAOB standards. You're going to see a lot of similarities. One of the things that you will see different is related to language. As an example, in the PCAOB audit report, we call a unqualified opinion the opinion where the auditor expresses an opinion that the financial statements present fairly in all material respects the financial position of the organization. In the Auditor Standard Report for non-public clients, we use the term unmodified to express an opinion where the financial statements report fairly in all material respects. The AICPA Standard Audit Report provides additional guidance related to management's responsibility. In this paragraph, management is stated to be responsible for the preparation of the fair presentation of the financial statements in accordance with generally accepted accounting principles, including the design, implementation, and maintenance of internal controls and fair presentation of the financial statements that are free from material misstatement. You will see similar language as compared to the PCAOB report in the AICPA report related to the auditor's responsibility. The key element here is that there is no reference to the PCAOB standards in the audit of non-publicly traded companies. Auditors use the AICPA ASB standards as opposed to the PCAOB. The actual opinion reads very similar in the two separate audit reports. In the AICPA report, we state, in our opinion, the consolidated financial statements referred to above present fairly in all material respects the financial position of ABC Company and its subsidiaries and the result of operations and cash flow for the periods then ended in accordance with accounting principles generally accepted in the United States. So you notice we still are referring to the GAAP standards as the basis for our opinion, and this is again not an unqualified opinion, but we call this an unmodified opinion, meaning that we are expressing the opinion without modifications. Let's talk about departures from our unqualified or unmodified opinion. The first level is a qualified opinion, where we are able to express an unqualified opinion on the financial statements except for, and then at this point we would identify what the issue is. Maybe it's inventory, maybe it's investments, whatever it is. The except for provides this qualification. An adverse opinion is an opinion that states that the financial statements are not presented fairly in conformity with generally accepted accounting principles. And then finally, a disclaimer of opinion states that due to significant scope limitations, the auditors were unable to form an opinion or did not form an opinion of the financial statements. Even if we report an unmodified or unqualified opinion, we may include additional information within the audit report. The first element relates to the substantial doubt of the company's going concern. Here is an example of an emphasis of a matter paragraph related to the substantial doubt as a going concern issue of the organization. The paragraph states why we believe there is substantial doubt related to the continuing of the organization and what management is doing in this regard. The next item that we want to talk about that may be reported as additional matters when generally accepted accounting principles are not consistently applied. You probably remember this from your intermediate accounting class. As an example, if the organization switches from LIFO to FIFO, both of these are generally accepted accounting principle standards. However, the inconsistency needs to be reported by the auditor to let the user of the financial statement know that the comparability between period is not there because of the application of these standards. The auditor has the discretion of adding additional emphasis of matter situations. As an example, if there is a certain level of risk or uncertainty that the auditor believes the user of the financial statement needs to understand, this information can be added. If there's significant related party transaction, this information should be added. If the company is a component of a larger business, if there are unusual or important significant events, anything that the auditor believes is valuable for the user of the financial statement to gain a holistic understanding of the financial position of the organization is appropriate in this section. Thank you for your time. This concludes our lecture, and have a great evening.